Hello, viewers. Does New Zealand feel very expensive right now to you? You might not be the only one if it does. What are the reasons? What's happening? So, in today's video, I like to cover the reasons behind it and what's happening and why it's happening and what can you do to safeguard yourself. Remember, the important point is we are not the only one. Other parts of the world feeling the strange and very similar level of pinch. And why it's happening? Why all of a sudden that we came out of global pandemic and all of a sudden we are seeing this cost of living crisis and why it's happening everywhere. So today I just like to pick up the points that what's happening around the world and especially us in New Zealand and what can you do to mitigate yourself from there. So this is me, I'm Saurav Wadhwa from Tax Accountant. I like to cover the videos, what attracts people and how we can help people achieve the financial freedoms and do better in life what they're doing. So prices are not the only problem. The problem is a bigger problem. If you look at the debt, people have a lot of debt as well. So because of the debt, the cost of servicing the debt is higher. Confidence level. So in general, we are not feeling the same level of confidence. So businesses are no longer able to take a bigger risk because they are unable to sell the goods, they're unable to sell the stock. So they're not taking the bigger risk. So that means there is no growth, no jobs. It's a ripple effect. Everything is tied up. And especially us in New Zealand, we like to import a lot of stuff as we do not manufacture those things in-house. So import duties are higher, our travel is expensive, and so is the rates in insurance, and the level of natural things are not being in our favor as well. Recent floodings, again and again, the insurance cost is going up. So it's a wider picture, so we can't pinpoint just a one thing here. That's what is happening. The pressure points being the low confidence. So low confidence means the jobs are lower, wages are lower, and people are more cautious around the spending. So they don't want to spend too much money on day one. They just want to hold on to it. Power companies, rates companies, they can't withhold the increases as well. So they kept on passing those increases to us. So in fact, everyone is linked to everyone. Weaker New Zealand dollar. If you have seen USD versus NZD, I got another video covering why we got a lower New Zealand dollar, which means that anything which we import from overseas becomes all of a sudden expensive to us. The product of $10 becomes all of a sudden $12. We got a hosting of websites. So we got a lot of clients who have US based servers in which we were paying $6 before, now we're paying $10. So that $10 is because of the exchange rate. So that's also kicking in and making it harder for us. Now also need to look at the inflation. So September 2025 inflation is 3%, so which is good. And average household living cost in March 2026 quarter is 2.1%. So these are the inflation rates coming out from States NZ. But this inflation is in line, but this is likely to remain in line, I doubt, in this year, as it might change significantly. Housing costs shape everything. As you know that the consumer goods that we consume and the rent associated with that, power rates, so that's the real feel. That's where we feel things are expensive, because household things, milk, butter, bread, when these starts getting expensive, vegetable, fruits, these getting expensive, that becomes the problem areas, and that becomes the pressure points that, we feel the pinch. And there is what is happening right now. The recent Iran conflict and the fuel crisis, look, I'm not touching on that, mainly because I still think that's a temporary, and that the period that's going to go away. But the prices go up, it takes a long time for them to come down. For example, I just saw an article in other day in newspaper that DIY projects getting expensive in a way that Bunnings and Marathon and them, they said that the cost of Mali, which is a PVC pipe product, is going to go up by 20%. So that $10 product has become all of a sudden $12. Will it come down when the fuel prices go down? Likely no. They might say this is my benchmark, and then they will just carry on from there. So when this goes up, it's very highly likely for us to see that coming down. Except all of a sudden new supplier comes in and they start selling product cheaper to compete, they might bring it down, but they don't bring it down just for us to save money. So if you look at OCR, it's not a play, start the economy, stop the economy. It doesn't work like that. For us to do anything, it takes months for it to come into action. For example, I often work with my clients, and when we restructure the business, such as reduce the workers, restructure the wages, do some planning and things. So whatever steps we take now, it takes 3 to 6 months for it to actually take effect in a business. Now think about it. In a small business, it takes 3 to 6 months to take effect. In a bigger country, how long it will take to take effect? I'll give you an example. Today's OCR rate is 2.25%. So when they dropped this, it's not too long ago, they came to this point. So bank will take weeks, months for them to implement this strategy. I'm not talking about bigger banks. They might come on board quickly, but there is a wider implication. There are many financial institutions that look OCR rate and dictate their terms of payments based on that. So all those will take a long time. And how and when you will see the effect in your bank account, it might take another 6 months to a year to 2 years to 3 years. We don't know how long. For example, my personal loan is fixed till end of this year anyway at 7.25. So it doesn't bother me that OCR is 2.25%. By the time I go and try to refix it, things might be back again. Who knows? And the relief of that, it takes a while for us to take effect, for businesses to take effect. It takes a while, and it hasn't been a while that we've been on low and we're thinking about lifting it again. Now businesses are forecasting lifting it again. So it's highly uncertain right now from the business planning and financial point of view. And as you can see, the exporters can benefit from weak New Zealand dollar. That's why we are seeing that our dairy exports, our other exports are making record high sales. The reason being we got a weaker New Zealand dollar. You must be wondering how that's possible. Well, it's simple. All of a sudden, the people overseas, they get better purchasing power. So they could get only $100 worth of goods. Now they can spend same amount of money, but they get $120 worth of goods. So all of a sudden our exports number becomes higher. So low NZD is good for exporters, but the pinch is felt by people here who are local, who live here, who buy things on a daily basis. And as you can see, some bills don't fall quickly. Once the council rates goes up, insurance goes up, power bill goes up, grocery bill goes up, even the dollar value will go up in future. Import might become cheaper, and wage growth will come in. OCR might remain as low for near few years. I highly suspect rates will come down. That's not going to happen. Council not going to say that, hey, we're going to save some money here and there, and that's where you go. Your rates going down. That's not going to happen. So that's, they have already set the benchmark, and that's likely to remain where it is. And as you can see, when the cost squeeze moves, how it moves. When the supplier cost rise, number one, and then the business margin shrinks, price increase happen, and the final product comes down to customer end up paying this price. So basically what we're trying to say, it's hit harder on renters, people who are importing, people traveling overseas, and family with low savings. So these guys will get hit the hardest. And the relief could be exporters who deal in foreign currency, they will make more money. Businesses with New Zealand based cost will be okay. Buyers with strong overseas currency. So if I have businesses overseas, I'm trying to do some income earning activity overseas, I'll be okay. And mortgage holders who can refix at a lower cost, they'll be fine. So these guys will be okay. But these guys, the majority of us fall into this bracket, not in this bracket. That's the thing. But we have to see how we can transform from this bracket to this bracket, how we can have income earning activity in overseas, how we can try to get some overseas income to us portfolio, whether it's rental income, whether it's business income. We have to think from that point of view. So 5 minutes money checklist, and quickly to conclude, you can do your own things and you can do what can I control. So things beyond our control we can't control, don't worry about it, because that's happening for years, that will keep happening for future years as well. But what can I control? What can I control today? Of course, what I can do, I can check what my loans are refixed. You know how simple things I can do. I figured it out very recently myself. There is a banking app, we all have banking app, but there are things that you can do, such as change your payment dates, change your payment amounts, and bank allows you to do it 3 to 4 times a year at no extra cost. It's on your fingertips. You can change it. Small changes here and there can save you. I just made a small change and it's saving me $50 a day. Can you believe it? So yes, go ahead, make those changes, do those financial analysis. If you're not sure, get some external help. What are your fixed debt, flexible debt? Audit your subscription insurance. We are overpaying for a lot of things that we're not supposed to pay. Go ahead, do that. Do stress test for grocery, fuel rates. If these goes up, will I be able to afford it? And think, do those things. And please have a buffer for 3 to 6 months of cash reserves with you. That would be the key criteria. And these are more for businesses, that you renegotiate your terms with your suppliers, payment dates, deposits, volumes, review your pricing, look at FX exposure, taxation, and plan for your tax cash flow. So more for businesses that they can do. And that's the key takeaway is New Zealand doesn't just feel expensive because prices are rising. It's a combination of multiple things that we have to look at the wider picture. The squeeze is coming from the uncertainty out there, and the higher imports, plus those sticky bills, just rates, insurance, when those goes going up, that we can't even get rid of. It's not a discretionary spend, it's a fixed, it's stick to me, I have to pay those sort of expenses. So that's why it's feel expensive. We have used following data. We have used Reserve Bank New Zealand, State NZ, and state housing cost, state NZ cost. We have used this to make this video. If you like it, please support us so that we can make more videos like this. Thank you for watching this.